Welcome to Bloomberg Law on Demand. I'm Lee Pacchia. In light of the role Fannie Mae and Freddie Mac played in the financial crisis of 2008, we're wondering where we are in regard to institutional reform. Joining us now to discuss, Peter Wallison. He was Treasury Department General Counsel in the Reagan administration, and he is currently a senior fellow at the American Enterprise Institute. Peter, welcome. Good to see you. Thanks for coming in.
Thank you.
So not a whole lot of progress in the last 3 years, unfortunately, on reforming the way the housing markets work in this country. We still have inventory overhang. Not a lot of sales are happening. It's hard to get a loan. Prices are falling. It's a state of great uncertainty as to where housing is going in the next couple months and years. What do you make of where we are at this point? Why hasn't there been any real progress?
I think one of the reasons, I'm afraid I have to say, is the government intervened in the market when it needn't have done so. What happens with the real estate market generally, and what has happened in the past, is that after there was the breaking or the deflation of a bubble, market prices fell very substantially, and they were allowed to fall to some kind of level that people believed was actually the bottom. But when the government interferes and tries to keep that from happening, tries to keep people in their homes, and etc., what happens is people say, well, we haven't reached the bottom yet. I'm not going to buy. I won't buy until I'm sure that we've reached the bottom. And so we've prolonged this process. What used to be a V-shaped recovery in the housing market that would lead the economy out of a recession has really become, I guess, U-shaped or even worse than that. Right. We're not going to see a recovery for a while because people have to be convinced that the housing market has reached the bottom.
Now, when we talk about housing, necessarily we have to talk about Fannie Mae and Freddie Mac. We have news out earlier this month of a proposal from two congressmen. Yes. It's being called the Campbell Plan. In essence, to me, it seems that they want to privatize it and break up the primary functions of Fannie Mae and Freddie Mac into 5 or so private companies that would basically act to guarantee the mortgage debt.
Actually, this is an idea that's worse than Fannie Mae and Freddie Mac, and it's very hard to imagine that anyone would come up with this. It's especially hard to imagine that someone who styles himself as a conservative Republican, as John Campbell does, would come up with an idea like this.
Well, I'm surprised that you've taken such a reaction to it because it gets this out of the government's hands, so to speak.
No, it doesn't. In fact, it creates 5 or more housing guarantee organizations, which are backed by at least the mortgage-backed securities that they issue are going to be backed by the full faith and credit of the United States. So the government is still completely involved. And that was the idea, to keep the government completely involved. I'm really surprised that John Campbell or any Republican would come up with an idea like this, since it's one of the objectives of the House Republicans to get rid of Fannie and Freddie, and thus the government's role in the housing market.
So what is the Peter Wallison prescription for reforming Fannie Mae and Freddie Mac?
Well, at the American Enterprise Institute, we've come up with a plan that we think will work quite well to eliminate Fannie Mae and Freddie Mac. The first thing we would do is make sure that the mortgages that are made, the mortgages that are securitized in our housing finance economy, are prime mortgages. So we would define a prime mortgage. That would be a mortgage for a person who has at least a 660 credit score, which is usually the dividing line between a prime and a non-prime mortgage, and a person who has a job and an income and can meet the obligations of the mortgage, and also a 10% down payment for the home. In addition, we would add to that mortgage insurance down to a 60 LTV level, which means that the mortgage insurer would pay up if the house loses more than the 10%, all the way down to 40% of the value of the house. And that means the mortgage becomes almost essentially riskless from the standpoint of any investor in the mortgage. Then we would make these mortgages available to the securitization market. And we believe that securitizers, from the large banks to many, many other organizations, would come in and start securitizing mortgages. Now, it's very important that we have a securitization system in this country because the banks, the entire banking system, is not large enough to make all the loans that are necessary to sustain our housing market. We have an $11 trillion housing market and about $6.5 or $7 trillion in the banks. So the banking system just isn't large enough for this.
Yeah, securitization is a huge part of this.
So we need securitization. That's
Talk to me about Dodd-Frank briefly. There is some language in that enormous bill that deals directly with securitization, the so-called risk retention or skin in the game provisions. I know you're critical of the legislation in total, but where do you come down on the risk retention idea? Did they get that right?
No, they didn't get that right. They didn't get that right because they focused on the wrong issue, and then they created inconsistent ideas in the legislation. The risk retention idea itself is not bad if it applied to everyone who is securitizing mortgages. That's an important point, because the idea of risk retention is to make sure that the people who are securitizing the mortgages take some risk and thus want to be very sure that they are only securitizing high-quality mortgages. But first of all, they exempted the FHA, the Federal Housing Administration, from the risk retention requirements. Now, it makes a certain amount of sense because they are insuring 100%.
Right.
But on the other hand, they can now securitize very easily subprime mortgages and the kinds of mortgages that got us into financial trouble in the first place. So what will happen is, as people realize that they can't meet the qualified residential mortgage requirements, they will attempt to make mortgages that can go through FHA. In addition, the proposed regulations that have just come out under the law, which are also logically based, exempt Fannie Mae and Freddie Mac. So the same thing is going to happen. All the originators who are looking for places to place bad mortgages are going to find that they can send them to Fannie Mae and Freddie Mac, or they can send them to FHA. So we have not gotten rid of the idea of making low-quality mortgages in our economy, and that's what got us into trouble in the financial crisis in the first place.